And what is it exactly that you do every day as a broker here?
Okay, so
like, do you have a typical day? Like, you come
my
here
days
in the
are
morning.
always my days are exactly the same all
Okay.
the time. So what we do is, so you get up in the morning and you do a little bit of research, you know, about what's happening overnight,
Yeah.
economically, globally, you know, as far as headlines go, okay? Politics doesn't really play a big factor in it, but depending on what the markets did overnight,
Yeah.
it's sort of important, whether anything has happened in different countries, whatever happened with oil, with gold, these are important things. Headlines, announcements made by companies, earnings, guidance, and whatnot. So you do a little bit of homework before you come in the morning. You get a sense where because right now, markets trade 24 hours a day.
Yeah.
Okay, our market even is open, even though the stock exchange isn't open all night. There are trading platforms. I'm using this abstract,
Yeah.
right? There are trading platforms that trade all around 24
time,
hours.
yeah.
But also when we're done trading, you know, Europe
Asia,
closes at
maybe,
11,
yeah.
Asia trades, and then it all comes back around. So it's important to know what happened overnight
Okay.
from our market. So then I come into work at 9 o'clock, okay, and then you come down here, and what I do, so I'm a trader, I trade my company's customers. I'm here to add some kind of an edge to give my customers. So what happens here on the floor of the New York Stock Exchange is the most significant market in the world.
Yes.
We may not do as much volume as we used to do, but where stocks open and how stocks trade here in this room on every given day will affect how things go forward.
Yeah.
Just because historically it's the New York Stock Exchange, and to this day still the most significant market. So then the market opens at 9:30. Before 9:30 you come in, you get looks in stocks, which means where are stocks going to open? Stocks open at a price as a function of supply and demand. People want to buy stocks more because earnings were out, news was out, Nike released a new sneaker, you know, North Korea attacked somebody. I mean, whatever the company is, right? If it's a defense company because of something global that happened, if it's a retailer because something else happened, is it a shoe company because they released something? Is there an endorsement? Is there good news or bad news? People want to buy the stock, okay? People want to buy the stock. Well, depending how much they want to buy, they will find a level where someone wants to sell it.
Yeah.
And that's the price, supply and demand auction market. So we give our customers an idea of where the stocks are going to open in New York. That's the edge I offer them.
Okay.
And then you can actually be trading individual stocks. You can be trading the market. There are these financial instruments that basically track the S&P 500, the Dow Jones Industrial Average. And so you get a sense of where the market's going to open. We may have IPOs, initial public offerings, new stocks that are going public. Tomorrow, Lyft is going, not here, but it's happening on the other exchanges. We had Levi's, the jean company, went public last week. So on any given day, we're going to have a lot of stuff happening here in the morning. So at 9:30, the market opens with a bang. Somebody rings the bell, whether it's a company, a CEO, a celebrity, whatever it is, a head of state, president, premier,
Someone always
prime
has to
minister,
ring the
somebody
bell.
opens the
Okay.
market. After the market opens, then you're basically in this world of algorithms and electronic marketplaces and computer trading. Once the market opens and once things settle down, then the market kind of runs on automatic pilot for a little while.
Okay.
Basically, people will put their orders in an algorithm and it will run for a couple of hours on its own. And then around 1 o'clock, we start gearing up. So anything can happen. If you look at the market here today, the market opened, it rallied up, and then sold off very hard, and now it's rallying back up.
Where it started almost.
All right, so there's a lot that goes into that, what happened here. So the market today is trading because of what's happening in yields, what's happening in financial stocks, what's happening in retailers. There's a lot of news that came out, and then the market kind of got tired. Retailers and financials rolled over, market sold off. So in any given day, Johnny, be nice. I'm not talking to you. Okay, good. So anyway,
in any given day, there's always a lot of things going on.
there's a lot going on. So when orders go into algorithms and they're trading, it's sort of like flying a plane. So an algorithm can only do as much as we've trained it to do, and it also needs it can't often react as quickly to crazy volatile moves in the market.
Okay.
So you're always keeping an eye that if the market's running steady, an algorithm's fine. It can be a volume-generated algorithm, a time-generated algorithm, but when this plane that we're flying in reaches some turbulence, sometimes we have to take it off automatic pilot and we have to fly it. So at any given time during the day, you really need to be watching what's going on. Different stocks will react differently to what's happening. Then around 1 o'clock, then we start gearing up for the close. People have an interest to buy stocks on the closing bell auction. So for me, what I do is one of the business models that I've built with my customers is to start trading the market at 1:30 into the close. So I'm trying to make a judgment on what's going to happen from 1:30 to 4 o'clock and where it's going to end. So we start getting into stocks, buying stocks, shorting stocks from 2 o'clock to 3:45. At 3:45, then things are issued out to the public of what's going to happen on the closing auction, and the market closes.
All right.
That's my day.
That sounds so...
It's super exciting.
Yeah.